Ladies and gentlemen, good day and welcome to ADF Foods Limited Q3FY22 Earnings Conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Rishabh Das from Pareto Capital. Thank you, and over to you.
Good afternoon, everyone. This is Rishabh Das from Pareto Capital. We represent investor relations for ADF Foods. On behalf of ADF Foods, I welcome you all to our Q3 and 9 months FY22 earnings conference call. I have with me from the management Mr. Bimal Thakkar, Chairman and Managing Director, Mr. Shardul Doshi, CFO, and Mr. Devang Gandhi, COO. We will have brief opening remarks from the management followed by the Q&A. Please note that certain statements made during this call may be forward-looking in nature. Such forward-looking statements are subject to certain risks and uncertainties that could cause our actual results or projections to differ materially from these statements. ADF Foods Limited will not be in any way responsible for any action taken based on such statements and undertakes no obligation to publicly update these forward-looking statements to reflect subsequent events or circumstances. I would now hand over the call to Mr. Thakkar for his opening remarks. Over to you, sir.
Thank you, Rishabh. Good afternoon, everyone. I welcome you all to our Q3 FY22 earnings conference call. We are very pleased with the strong performance the company has delivered this quarter with a standalone revenue growth of 28% and a consolidated revenue growth of 19% year on year. The growth was majorly driven by robust volume offtake amidst the festive season, which is generally a stronger quarter for us. In addition, several measures like price hike, better sales mix, and manufacturing optimizations led us to a standout improvement in our gross margins. These measures helped us counter the impact from rising freight and other input costs and helped us maintain our EBITDA and profitability. We also saw a favorable quarter from our distribution business with revenues of 26 crores, a growth of 67% year on year. We continued to see strong demand in both our US and UK markets from this segment. As I had mentioned previously, our goal for our distribution business is to expand product range and enter new markets. On that end, I'm proud to announce of our recent alliance with Patanjali Ayurved Limited, where we've undertaken exclusive distribution of their products across UK and Western European markets. This alliance will offer significant opportunities to our company to expand our product basket with our retailers. By leveraging our robust global distribution network, we can deliver complementary product categories directly in stores and offer a wider range of products to our consumers. This alliance will also help us further engage with the growing Indian diaspora in Europe. Lastly, in terms of capacities, our debottlenecking and modernization efforts are undergoing in our existing manufacturing units. Additionally, we have brownfield expansions underway at our current facilities. Together, these efforts are expected to unlock additional capacities of around 20%. Our focus remains on investing in building a strong distribution network and control a higher portion of the value chain. We have invested in distribution centers and warehouses to engage in direct distribution. This helps us gain control of our supply chain and enables direct reach to retailers, thereby pushing our products and retaining distribution margins. This is all from my side. I hand over the call to Shardul for the financial update. Thank you.
Thanks, Vimal. Let me brief you on the financial highlights for this quarter. In Q3 FY22, our total consolidated revenue stood at rupees 119 crores, up 19% compared to the same quarter last year. Our core standalone business comprising exports of processed foods, registered a robust growth of 28% Y-on-Y from rupees 68 crores to rupees 87 crores. Distribution business also saw good revenue growth at rupees 26 crores for this quarter. We have witnessed a strong growth this quarter and are confident of demand and volume expansion going forward. As Vimal mentioned, our pricing and product optimization measures helped us attain strong gross profit growth this quarter. Gross profit increased 53% Y-on-Y to rupees 65 crores on consolidated basis, and margins improved from 42.5% in Q3 FY21 to 54.5% this quarter. We also continued to witness rising freight costs, which had impacted our margins. However, robust gross margin helped lighten the overall impact on EBITDA and profitability. EBITDA stood at rupees 20 crores with a margin of 16.9%. PAT for the quarter is rupees 14 odd crores with a margin of 11.5%. For 9 months, we reported a revenue of rupees 319 crores, a growth of 18%, gross profit of rupees 160 crores with a margin of 50%. EBITDA of rupees 56 crores with a margin of 17.4% and PAT of rupees 37 crores with a margin of 11.7%. We have seen growth in both the segments we operate in. Our growth in processed food segment is better in comparison to the distribution business. Overall ratio of both the segment is 79-21, 79 being the processed food segment. We continue to maintain a robust balance sheet with a net cash position of rupees 48.4 crores. Lastly, we are pleased to announce that the company recently received approval from government under category 3 of the PLI scheme for food processing industry. This incentive would cover 50% of our international branding and marketing expenditure or 3% of sales, whichever is lower, up to a maximum incentive of rupees 62 odd crores during 5 years till FY26. We are confident that this increased available funds will help us further strengthen our brand positioning in the international market and surely result in higher sales for the company. That's it from my side. We can now open the floor for Q&A session. Thank you.
Thank you very much, sir. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may please press star, then 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star, then 2. Participants are requested to use handsets while asking a question. Anyone who wishes to ask questions, please press star, then 1. The first question is from the line of Ravi Naredi from Naredi Investments. Please go ahead.
Thank you very much to giving me opportunity, Vimalji. Really, you have done a wonderful work for this quarter also. Sir, any figure of sales and commission will you update for Patanjali product for financial year 23?
So, we will be the Patanjali business. You will start seeing only in this next financial year, and our estimate for the first year is going to be about close to $2 million or about 15 crores. That is what we are expecting in year 1. In terms of margins, the gross margins we expect around anywhere between 15 to 20% gross margins on this.
Very nice, very nice, fantastic figure. Sir, this quarter food inflation was very high. So what is impact on our cost of goods produced and how you overcome this burden? Any price increases you have done or we are going to done in future?
So as I mentioned, we've been able to maintain our margins through some amount of price increase, better product mix, and reducing our costs. And we continue to do that as we speak. Even in this quarter, we are increasing rates for certain items, and we will continue to optimize costs and sell more higher margin products.
Right, sir. Right. And what is the freight cost in quarter four, and when you think it will be normal one?
So, I hope it's anyone's guess. We really hope that this freight, various governments from all the countries should intervene and try and put pressure on the shipping companies, because the freight costs have gone totally out of control. I mean, where it used to be 7% for us in a normal situation, we are at the moment at about 19%. So it's a 12% increase, and despite that, we've still been able to maintain margins. So, once things normalize, it'll get much better for us from both our margin structure, and also we'll be able to push in more throughput.
Right, sir. And last, sir, what is Surat facility performance in quarter three in top line, and what will be in quarter four?
So the Surat facility which we have was operating at about 65% in Q3, and in Q4 we hope it gets to about 75 to 80%.
Very nice, sir. Very nice. Thank you very much, sir. All the best, sir.
Thank you. Thank you very much.
Welcome.
Thank you. The next question is from the line of Nayan Gala from Ortega Wealth. Please go ahead.
Hello.
Yes.
Hello, can you hear me? Yeah. Sir, congratulations on a good set of numbers. Sir, I had a few questions, particularly during this quarter. What grew, what were the products that, contributed to the growth in terms of volumes and values, if you can just give us the idea?
So, all our categories grew well this quarter for us. So it's the meal accompaniment business which grew well, the ready-to-eat business grew well, the frozen food grew well. So all categories did well for us in this, including our agency business also. That also grew well for us.
Okay. And if you can just, give us the breakup in terms of what was the agency business and what was the, revenue from our own brands?
So I think Shardul mentioned in his speech the percentage of the processed foods business.
Yeah. So we are almost 79% is coming from the processed food business, and 21% is coming from the distribution business.
Or the agency.
Okay. And going forward, is this the ratio that we are going to maintain, or there is a slight change that we expect?
Our focus is always going to be on our own manufactured items. As we mentioned, the agency business is a complementary business for us, and it is an important business as well. So I think we will try and, it could go up to a 70-30 kind of a mix, 75-25, it depends. But majority of the business will be our own processed foods business. That is something.
Majority of it. Oh, okay. And sir, on the Patanjali front, we have signed this agreement in December, and I believe we will be, executing the products, selling the products from January onwards. So I just wanted to ask, is this a, a renewal contract on every year basis, or it is a long-term agreement?
No. So firstly, the business on Patanjali will start from 1st of April. What happens is, we have to get their labels to be compliant with the European regulations. So that work is ongoing at the moment. We expect them to make their first shipment in the month of March. So you will actually start seeing sales coming in the next fiscal year. And the contract is a 3-year contract, renewable every 3 years upon mutually agreed conditions.
Okay. And what kind of products? Is it the whole basket, or we have some few set of products that we plan to, distribute?
No. So, for not all their products are eligible for sale in European markets. So the products which are the core products and fast-moving products, those are the products which we are dealing with.
Okay. Thank you. And just wanted to, get a sense on the outlook of the US business and business in India. If you can just give us a brief on that.
So our US continues to grow well. It continues to remain one of our main markets. And we are investing in distribution out there. As you know, we've got 2 warehouses in the US. We hope to open a couple of more warehouses by the next financial year, in the next financial year. And India, at the moment, India is very negligible. It's 1-2% for us, but we are taking on someone to head our India business. This person joins us in middle of February, and we are going to start off with e-commerce first, and then later on make our way into modern trade and general trade. So next year, you will see the India business starting off. It may not be huge in terms of revenue to begin with, but over the next 5 years, we hope India at least contributes to about 10 to 20% of our overall business.
Okay. And on the US business, the brands that like PJ and Nates, if you can just give us some brief on how is the brands picking up and what kind of growth we see, particularly in the US markets.
So the PJs and Nates brand, as I mentioned in our last call, also we've taken on a new VP of Sales and Marketing there in the US, and these brands are still growing. There's a lot more distribution that we need to get in these brands. So we are very positive. We are adding new products. There is a very important trade show which is going to take place in March in Los Angeles, and we hope to launch some new products there as well. So, we are very excited with the future because the product categories which Nates is in plant-based products, PJs is an organic range of products. So we are in the right space. We just are building out distribution and trying to grow that aggressively.
Okay. And what is the sustainable run rate that we, look forward to for these brands?
So the US business, which comes under this, we have PJs, Nates, and we also have some private label business as well out there. And that business, we've had a little bit of disruption in supplies because of the supply chain issues in this last quarter. So actually that business did not grow the way we expected it to grow in this last quarter. But we are now trying to regularize that, and we expect it to grow, at least grow at about 15 to 20% every year.
Okay. So 15 to 20% is the figure that we look at for the US business.
Yeah.
Yeah. And if I can ask one more question, just wanted to get an update on the capex and the goals and what is the work done on the brownfield and debottlenecking project that we are looking at.
Sure. I'm going to have Devang answer that. He'll give you a
So on both the issues, we are going ahead with the greenfield project as well as the brownfield. Brownfield including debottlenecking as well as putting up new capacities, additional capacities in the existing units. So we are on stream in everything. Whatever our current projections are, we are in line with our current projections.
So by we can expect the capacities to be available from early next year.
Yes, we should be in a position, barring unforeseen circumstances.
Okay. Thank you. I'll join back with you.
Thank you.
Thank you. The next question is from the line of Faisal Hawa from HG Hawa and Company. Please go ahead.
So 2 questions. One is, would we be, are we being offered, some large contract manufacturing deals from, food majors from all over the world? And secondly, if you are wanting to really, break into some new countries, which are the 3 to 4 countries which you would really want to target, or would you want to go more deeper into the US only and penetrate it properly first?
Yeah. So we, as a company, we do private label business, but our focus always continues to remain on our own brands. Having said that, we have added one or two new customers on our private label business, but 70% of our revenues continues from our own brands. So our own brands continue to remain our focus always. Okay. As far as adding new countries, I mean, that's a constant process for us. But what we like to do is increase our depth and penetration in the existing main markets. So US and Europe continue to remain our focus markets, where we are looking at more new customers, newer accounts, penetrating within the existing stores, increasing our depth in there. At the same time, we look at new countries as well, but the newer countries take time to grow. So it's much better for us to look at markets where we are already well penetrated to grow within that.
And sir, what are the kind of executives we are wanting to hire, and which are the kind of tools that we look at to really hire them from?
I didn't understand. What was the question?
So I think the next level of expansion will take place from hiring very, very good executives in sales,
Sure.
particularly. So
Yeah.
which are the kind of tools that we are attracting, and which are the kind of tools of people whom we look at, and which companies are they presently employed in?
So, it's a mix of various things, right? You have headhunters who we appoint. There are people through word of mouth. And then there are people who we meet at trade shows. So it's a combination of various things how we attract people. But headhunters is definitely one of them.
Are you finding it more easy now than say like 7 to 8 years back? Where that was.
Yes. The whole company has changed and evolved in these last 7-8 years. Correct. So yes, attracting talent is much easier compared to what it was 7-8 years ago.
Thank you so much, sir.
Thank you.
Thank you. A reminder to the participants to ask a question, please press star, then 1. The next question is from the line of Mayur Niman from Profit Mart Securities. Please go ahead.
Thank you for the opportunity and congratulations for the good set of numbers. I just want to ask what is the outlook for the next few quarters or next year? So can you share your thoughts?
So we, barring any kind of disruptions which could take place because of COVID and supply chain, we hope to continue to maintain this kind of trajectory and growth levels even in the next year.
Okay. Thank you, sir.
Thank you.
Thank you. The next question is from the line of Sanamdeep, Edge West Company. Please go ahead.
Hi, sir. Am I audible?
Yes, you are.
Yeah, sir. I just wanted to know that as we are seeing the agency distribution business is the next growth leg of our business. So how are we seeing the competitiveness in that business? Mean to say, for today, Patanjali and Hindustan Unilever as Blue Gold is distributed by us in another country. So if the company gives a whole order to any other company, so how are we seeing that thing? Mean to say, if any company gives that business to another company, then whole of the business end up there with that company. So how are we seeing this thing?
See, the agencies which we have, those brands are very strong brands. They have a strong following, both Patanjali and Unilever products. So, they have competitors, but they also have their own strength and loyal consumer base. So and it's very complementary to our product range. So that, along with our products, gives us a much stronger position with the retailers, and we are able to service our retailers who are our end customers in a much better way. So yeah.
So our main focus is their cross-selling. Mean to say, to increase our business in that way. Cross-selling is the main focus.
Yes, absolutely.
My last question is that, sir, as I seen in your annual reports or in your financial from 2011, 12, or 13, 14, the dividend payout ratio is about 40 to 50 to 60%. But today, if I see the dividend payout ratio is about 14 to 15%, and if we are doing brownfield expansion and debottlenecking, I think we can increase the dividend payout, or you have some different thoughts on it?
No, so, right now, we will continue. We should, as a company, we intend to keep maintaining our track record of being a dividend-paying company. We have a lot of expansion plans, inorganic plans, so I don't know how much more we'll be able to increase. We need to keep the cash also for all these plans. So, we will, as a company, as I've said, we will maintain our dividend-paying record, but I don't see a huge increase in dividend payouts at this point.
Okay, sir. Thank you so much, and the best of luck before next year.
Thank you.
Thank you. The next question is from the line of Dhiral from Phillip Capital. Please go ahead.
Yeah, good afternoon, sir. Thanks for the opportunity. So what kind of investment that we are going to incur under this PLI scheme?
What kind of what?
Investment, sir.
Oh, for the PLI, this is basically for sales and marketing support, right? So it's branding, advertising, promotion, things which we are already doing as a company. And with the support which we've got from the government, we will be able to increase our spend more, and which in the long term will help our brands become stronger and grow our business as well.
Okay. And how this will help to augment our overall sales?
Well, as you get, when you are spending and being aggressive on your sales and promotion, you have that much more exposure and awareness for your brand. So it is definitely going to help increase the sales of the products.
Dhiral, just to add to what Bimal said, unlike other PLIs, this is not on the incremental sales or incremental capacities which company has to do. This is especially for food and F&B industry, where the ministry wants the brands to become stronger in the international market and get more exports, which thereby country also gets more foreign exchange. So this is a very specific scheme under PLI which is meant only for the food processing industry.
So will this help to improve the overall margins?
Well, what happens is 50% is subsidized by the government. So it will help us in that sense to improve our margins as well.
Okay. And so what is our capex plan for next year? As you said, we are debottlenecking the capacity by 20%. So what is the capex required for that? And for the greenfield plant that you were talking about?
20. Yeah, the capex plan is the debottlenecking should be in the region of about 50 to 70 crores.
That's greenfield.
Yeah.
So this is greenfield.
Yeah, and for the debottlenecking, we should be spending about 20 crores.
So this will take our overall capacity too, sir?
So this will take our overall capacity to at least 30% of what we have.
Okay. Got your point, sir. Thank you so much, sir.
Thank you. The next question is from the line of Richa from equitymaster.com. Please go ahead.
Sir, thank you for the opportunity. Sir, I wanted to understand, how the product mix has moved, because there has been a significant improvement in the gross margins. Which are the products that are leading to this? And going forward, whatever product launches we have, will they be towards, higher range of value-added products where we are getting higher margins in frozen foods, or accomplishment kind of thing? So if you could share some light on that.
Yeah, so as far as the product mix goes, as I mentioned, we've grown in all the categories. Our focus will continue to remain on the ready-to-eat and the frozen food segment because those are the ones growing faster. We've also, we also took a price increase as well, so that has also helped us. And new product developments, all those things are being done on. One is, of course, we want to focus on the higher margin items. At the same time, we have to give products in terms of what is the consumer requirement and trend. So we'll continue to focus on that as well. So it's always going to be a combination of everything, which will help us sustain our margins and continue to keep it that way and improve wherever we can.
All right. But sir, if I remember, I think the last year, perhaps the share of frozen food was around. So would that have moved significantly this year, or we are around the same range?
We normally do not give a breakdown of the categories, but as I said, ready-to-eat and frozen is our core focus products, which we continue to focus on.
All right. Sir, my next question is that, we have been making some efforts to break into supermarkets. So, if you could share some light on developments there.
Yeah, that is where we are seeing, we have a lot of ground to cover on we call this the mainstream business, which is catering to the non-Indian diaspora. And our efforts are there to continue growing that. We have had some successes with some new customers, big customers, which have come in on this in the supermarket business, and we continue to do that. It's an ongoing process, but that's clearly where our focus is because we have a lot of ground to cover on that.
Okay. And sir, if you could also share your margins in B2B or non-branded business, the private label parts that you do.
So all I can say is we have healthy margins in those businesses because these are also value-added products. So it's not like a commodity where you're working on wafer-thin margins. We don't give breakdowns for the margins of various businesses that we have.
All right, sir. Thank you so much. All the best.
Thank you.
Thank you. The next question is from the line of Bhishma, an individual investor. Please go ahead.
Hello. Can you hear me?
Yes, loud and clear.
Yes. There's a follow-up question on the earlier question. What is the percentage of business derived from your mainstream business? That is modern trade chains like supermarkets.
So at the moment, I would think it would be under around 15 to 20%. So okay. Our goal is to grow that at a much faster pace.
Okay. So if I may ask, what is the main challenge or bottleneck that we face as a company in getting into these large format stores?
So, one, they have a schedule which they work on, right? Where if they are doing any kind of introduction of new products in our category, most of these guys have a once in a year kind of a window. So you have to present during that time, make sure your product gets listed during that time. If you miss that window, then you have one more year to go to present again. And two, in the US, Indian food is now getting popular, so it's helping. People are looking for these kind of items, but the shelf space is still very limited. So there are a lot of people fighting for that same shelf space. So you have to then end up enticing those retailers by giving them more listing fees or more aggressive promotions. So with the support which we've got now under this PLI scheme, we should be able to be a lot more aggressive in terms of being able to offer a more aggressive marketing plan to the supermarkets to get our products in. So these are the main bottlenecks for it.
Okay. So, as far as this once in a year opportunity is concerned, what exactly, I mean, do they give you a brief earlier so that you can then design what is the turnaround time that is given to us to present? I mean, can you sort of...
Normally, you get a 1 month or 2 month heads up on presenting. So that's how it normally works. In COVID times, people have not been able to have, our sales guys have not been able to have face-to-face meetings with the buyers.
Yes.
So presenting new products, without actually having to be able to get them to taste it, for us to be able to show it to them, that has also been a challenge during these 2 years. So, but now with things opening up, we hope we will be able to be a lot more in front of them and have a lot more success in getting more products in.
Okay. As far as the success ratio is concerned, is there any thumb rule or is there any kind of number that you can put as to how what kind of
there's no kind of thumb rule in that sense. But I mean, we've had recently one of our products which got listed in one of the Canadian supermarkets, and that product did very well for us. So there is no thumb rule, unfortunately.
Okay. Okay, sir, and the last question is on the QSR side. Is there, again, what is the percentage of business that we, get from the QSR side?
So, we are now going to focus on supplying to, most of our business is B2C at the moment. We have some amount of business which goes to the restaurants, which we call the food service or the HoReCa. QSR is another vertical within that. So we are now focusing on tapping the QSRs. So the likes of, you have your Barbecue Nation here in India. There is another aggregator called Kitopi, which is there in the Middle East. So, and similarly, you have companies like that in the US. So we are now making a focused effort to cater to the whole QSR thing and creating products which can work for them, because that whole category is growing very fast. So we want to be part of it. We have the infrastructure and the back end for it. We just need to modify a few things in terms of the packing size, etc. So we are doing that, and that will be a new vertical which we will focus on and try and grow. Hello?
Excuse me, this is the operator. Mr. Bhimsha, do you have any further questions? As there's no response, we take the next question from the line of Saurabh Shashikant Trivedi, an individual investor. Please go ahead.
Good evening, sir. Saurabh here. I have a question. The flight cost is here to stay. It sense the world will open more eagerly towards demand and all. So are we planning with Indian government or any government throughout the world that they pressurize this flight people to reduce their cost?
I mean, I'm hoping they do. We've been discussing with various, like the CIIs and the FICIs. I think it's affecting all the countries. So, I mean, just a few days back, there was something in the news where even the US president is trying to prevail upon these companies, because that is what is one of the other reasons what is driving inflation as well worldwide. So I hope there is a concerted effort by all the various countries to try and get this under control, because it's affecting the whole world.
And sir, if nothing happens, are we okay with increasing cost? I mean, like the MRPs of our product?
We have done that already, right? So, I mean, if you can imagine from 7% to 19%, if my cost has gone up and yet I've been able to maintain our margins, it's been because some price increase has happened, better product mix has happened, better efficiencies at our end. So it's a constant thing which we will continue to do.
Okay. Okay. Thank you so much, sir.
Thank you.
Thank you. The next question is from the line of Ravi Naredi from Naredi Investments. Please go ahead.
Thank you very much for the again opportunity. Sir, how much top line may we get by this 50 to 70 crore capex which you have mentioned in earlier question?
So we normally look at a 2.5 times to the investment which we make in capex. So the 50 crores should be able to get us to about 125, 130 crore top line.
Okay. And for this 62 crore PLI incentive, how much capex we need to do?
We don't have to do any capex. This is on marketing support.
Oh, marketing support. Thank you very much. Thank you very much. Okay. Okay.
Thank you. The next question is from the line of Faisal Hawa from HG Hawa and Company. Please go ahead.
So, sir, a lot of these cloud kitchens are also now coming in. A lot of self-entrepreneurship-based businesses, are able to now sell by cooking their own food over Swiggy, Zomato. And this is a worldwide phenomenon now. And there's a lot of social commerce could come in also. So how are we actually, placing ourselves in this space by, actually either advertising on social media or, making ourselves more aware, with what our products are?
No, so as I mentioned earlier, we are now making a focused effort to cater to these QSR/cloud kitchen people. So, we are approaching all the big guys, even in India. So we already had initiated dialogue.
I'm sorry, you've got my question wrong. I'm talking of this being like a B2C to B, where you sell to a self-entrepreneur who, manages the cloud kitchens and then in turn sells to the consumer again. And not to, these would not be actually QSR, they would be like...
No. So, so a lot of these cloud kitchens are actually buying out the QSR brands and producing. So they have a front end and they have the cloud kitchen as well. So take your Rebel Foods and all these guys, they have been buying out a lot of these QSR brands. They started off as cloud kitchens and then started buying off the QSR brands. So we are talking to all these big aggregators to see how we can help in being part of their supply chain.
Okay.
Right?
So we are making some big efforts on it. And
We are making a focused approach and going to have a separate vertical, separate person manage this business for us. Because we have the back-end infrastructure already in place. So, and like you correctly said, that whole industry is growing very fast. So we want to be part of that whole supply chain in there. So we are making a very concerted effort.
Early movers would actually, close out a lot of other people who could come in later, because generally our execution has always been perfect.
No. So we've already initiated that. It's been since the last couple of months, and we hope to at least tie up with one of them very soon. So we are at that stage right now where we are giving samples, working on some products for them. So that is going on, and we clearly see that as a good opportunity.
Thank you so much.
Thank you.
Thank you. Participants who would like to ask questions, please press star, then 1. The next question is from the line of Richa from equitymaster.com. Please go ahead.
So thank you again for the opportunity. So my question is on the greenfield expansion of 10,000 odd MT. This entire facility is likely to commence production from the beginning of FY24. Am I correct?
No, it will be in 2 phases. The first phase will commence within 18 months. And based on that, we will add the additional phase.
Okay. And I mean, is there any breakup, like what kind of capacity, actual capacity will come in first phase versus second phase?
Yes, we can give you an estimate. It will be about the frozen capacity would be added, would be about within the range of 5,000 tons approximately.
Okay. And sir, what kind of time period is required for this to achieve optimum utilization? Is this doable in the first year?
Yeah, so normally we would take it up in stages of about 3 months to 6 months before we attain full capacity. That's about 70 to 80% optimum.
All right. Thank you, sir. Yeah.
Thank you. Participants, to ask a question, please press star, then 1. Anyone who would like to ask questions, please press star, then 1. As there are no further questions from the participants, I would now like to hand the conference over to Mr. Das for closing comments.
Yeah, thank you all for joining the Q3 FY22 earnings call. For any further queries, please get in touch with us at Pareto Capital. Thank you.
Thank you.
Thank you.
Thank you very much, sir. Ladies and gentlemen, on behalf of ADF Foods, that concludes this conference. We thank you all for joining us, and you may now disconnect your lines.